the next phase of growth, the mainstreaming of Indian private equity will be on the back of the emergence of domestic capital pools.
Fundraising is, the first port of call that, can you raise funds? Can you generate, enough capital that can be invested?
The fact that there are increasingly a number of families who believe that selling out to PE is the best way to maintain the family wealth.
India is one of the fastest growing countries in Asia. And so global investors are looking more to Asia for growth.
And a very warm welcome to all of you. PEs are making headlines every day, but this group of people that we have here, they will decode for us the India story and what makes PEs the big headline makers. Yeah, I'll start with you, Hari. Can you just decode the India story for us, please? What has changed for India? Why are they making headlines?
Yeah, thanks, Nivedita. I would start by saying that private equity has been in India for more than 25 years now, and it's one of our biggest contributors to foreign direct investment as well, and creates so many jobs. For private equity specifically, India is underpenetrated. India is the fastest growing large economy in the world for the past 3 years. And we expect India to be a driver for demand globally for private equity. So we still think it is many years of growth for private equity in India.
Mr. Gopal Jain, I'll come to you next. You are making headlines for a different reason. I know you are in a silent period, but what does the PE scene look like for India without mentioning your company IPO specifics?
Well, thank you. For many years, India has been the fastest growing alternative market in the world. But that's also because we're starting from a small base. And private equity, as Hari said, in India, punches way below its weight. But I think we have enough data. We have a strong trend to show that private equity in India is on its way towards becoming a mainstream sector. So just as banks are mainstream, insurance is mainstream, mutual funds is mainstream, we have $2.5 trillion of bank deposits in India. By comparison, private equity and AIF is a small fraction, but now we can see how private equity, venture capital, we use this term alternatives, are on their way towards becoming a mainstream sector. And the second big aspect of this story is the emergence of domestic capital pools. So yes, private equity is a US product. It's been exported successfully by the US to all over the world. It works in large economies. India is now a large economy. Every large economy basically sources its capital from its domestic economy. And we can see that the next phase of growth, the mainstreaming of Indian private equity, will be on the back of the emergence of domestic capital pools, which is how we connect our domestic savings ecosystem to private equity, venture capital alternatives. Thank you.
Abhishek from Samara Capital, mainstreaming of the PE sector, do you agree that it is come into mainstream from being a niche sector earlier in India? Are we coming of age?
Yeah, I would tend to agree that if you look at globally, across 25 years, private equity as a global private equity pool has outperformed the public markets by 6.7% if you look at 10-year rolling returns. So it's a proven form of making investments, parking capital and generating returns out of it. And that's at a global level. In the last 4 years, we've seen 3 years where $2 trillion were invested in a given year. So it is certainly mainstream when it comes to the global level. In India also, what we are seeing is that the number of deal flows have started to go up. there is a very vibrant ecosystem which Gopal also highlighted, that there is domestic pool of capital that is now being made available to the AIFs and fund managers in India. Just to put this in context, if you look at ultra HNIs and family offices whose wealth is getting managed by wealth managers, just about 7 to 8% of the allocation, as per an Avendus report, is towards AIFs. And the report itself predicts that it will go up to 15 to 16%. So it's not just the ultra HNI pool of capital that will go up, but the percentage allocation towards AIFs will go up. And for anything to become mainstream, fundraising is the first port of call, that can you raise funds, can you generate enough capital that can be invested. The second part is the deals itself. Are there enough deals that are happening? And so if you look at, again, whether it is the VC ecosystem, which is very vibrant because of artificial intelligence related themes, there is EV related themes, a lot of innovation that the government is also encouraging. And on the other side, there is growth capital and buyouts, which are also taking prominence. So there is a lot of deal flow that is also available. And the last thing is exits. So to complete the entire ecosystem, you also need a vibrant exit mechanism. So traditionally, we've had IPOs, which remain as buoyant, at least for the last 2-3 years. We've seen that consistently. There are domestic M&As that have become more prominent. There are new pools of exit with secondaries fund that are coming into play. There is an SME IPO that people can opt for. And as more capital gets raised by alternate investment funds, there is a financial sponsor to sponsor exit that one can look at. So if I look at fundraising, deal flow, as well as exit, that completes the entire ecosystem. And India is really headed in that direction, where we will see record deal flow, capital getting raised, and exits also being availed.
I'll come to you, Manish Kejriwal of Kedaara. Do you think India is in a sweet spot as far as the PE sector is concerned? And how long will the good times continue?
Well, I think from our perspective, it better continue forever, because we don't know how to do anything else. But on a more serious note, first, thanks for all having us here. It's great to be back on this panel. But I'll say, so far, the reason why it's in a sweet spot, you've got the GP perspective so far, but you've got to look at the industry a little bit more broadly. The reason, I think Abhishek touched on this, there's a term called DPI, which most of us didn't know what the word meant 15 years ago. India was very good at attracting capital. Around circa 2010, we almost didn't have returns to our LPs. And that's what gave the country and private equity a bad name for most of the middle of the last decade. That has fundamentally changed. The IPO markets obviously are a very important component, but to what Abhishek said, we have sponsor-to-sponsor sales. We just, in the process of selling a few companies, we sold a housing finance company to a firm called CVC. We sold Manjushri to Advent. We've taken 9 companies public. So it's a very robust exit market, and unless you return capital to your LPs, they're not going to reinvest it back in India. So that is a fundamental change that's happened, I would say, in the last 10 years. And the IPO markets also have a big role to play. But the other, if you step back, Nimita, the real driver, see, making these minority investments we used to always do, and we will continue doing it. That is a large component of what all of us do. But the other big change in India, which is, you can look at it positively or negatively, depending on which side of the coin you're looking at. Many of the writers in your newspapers, take umbrage at the fact that the next generation are managing family offices. We have lots of articles by Uday and Harsh and all that on that. One of them owns your newspaper. But for us, the fact that selling your companies is no longer a mark of shame, but is widely accepted, is phenomenal. And that actually, if you talk to each of us, has been the real reason why many of us have managed to do controlled transactions. The ease or the acceptance of that truly drives the number of companies out there which we can take large stakes in, and increasingly many of us are taking controlling. We also do minority, but increasingly, if you're putting in all this effort, you want to take as large a stake as possible. So the fact that there are increasingly a number of families who believe that selling out to PE is the best way to maintain the family wealth and encourage them to do other things, including running a family office, at least from our perspective, nothing to be ashamed of. So those to me are fundamental drivers. The second one, even more important, I mean, we've started, I really think, I wasn't joking, we're at the top, really the top of the iceberg in a sense, in terms of what we've done so far. And most of us, our investments are Bombay, Gurgaon, Bangalore, maybe 20% outside of 3 cities. There is an incredible amount. I mean, India is a country of entrepreneurs. So whether we're supporting them to grow in minority deals or taking on ownership from them to sell to somebody else, we're at the very, very start. I would say we're a cottage industry right now, and the best years are yet to come.
Thanks, Manish. Coming back to you, Hari, how do you think the India market is behaving vis-a-vis the global market in terms of PE and VC? Is there any difference, or are they in sync?
I would say that as Gopal mentioned, we're starting off on a low base, which means that we've had many years of growth. And as Manish said, the market has also shifted to buyouts. I remember when we did our first buyout in 2013, it was only 20% of the overall market. Today, buyouts are 50% of the overall market. And with the size of the economy growing and more families open to succession, both the overall pool will increase and the proportion of buyouts will increase. So we feel that both of them will rise. And with all the challenges in the rest of the world, there is more attention to Asia and India. If you look at Asia again, India is one of the fastest growing countries in Asia. And so global investors are looking more to Asia for growth. And within Asia, India is a bright spot. So incrementally, I would expect India to grow ahead of everybody else. But it's also of a small base, and it's also accompanied by a shift to buyouts. So I would absolutely say that on a percentage basis, India will grow much more than other markets for PE.
Gopal, I'll come to you. Do you think there's greater confidence in the India market? How do you look at India as a destination market for PEs?
Well, Indians have been optimistic and excited about India for a long time. But sometimes the answers to very complex questions are very simple. Private equity works in large economies, period. It works in large and sophisticated economies, period. India, until now, recently was neither large nor sophisticated. Thank God, we are now a large economy. So actually, the term global is a misnomer. India is the 5th largest economy on the planet. The other 4 large areas, which is US, Japan, the Euro area, and China, essentially account for 90 to 95% of global private equity. Now that India is a large market, and with large markets come a large economy, a large IPO market, large supply of entrepreneurs, large consumption base, all of that, private equity is set to grow and catch up to where it should be in the economy. So as I said previously, in India, private equity punches below its weight because private equity worked only in part for the last 30 years. Last 5 or 6 years, it started to work better, started to produce returns. The machine is working. As Manish said, we're no longer just investing, we're also exiting. Earlier, we only had growth minority. As Hari said, we now have buyouts, we now have venture capital. We have all kinds of products. And as we become a larger and larger economy, as we become a more sophisticated economy, and being a large economy is very rare. The last time somebody broke into the ranks of a top 5 economy was 15 years ago, when China broke into the ranks of the top 5. So it's a global event, and with that comes this private equity surge, this private equity efficiency. It is here to stay. For as long as we can stay a large economy, a globally relevant economy, and a rapidly growing economy.
Abhishek, carrying on from there, do you think any further reforms are required to make it even more vibrant for PEs and VCs? Do you expect anything?
Well, as industry, we will always encourage more pools of capital coming our way. Just to give again some data, there are global institutions like insurance companies, pension funds, endowment funds, who invest roughly about 13 to 14% of the capital that is available to them in private equity instruments. And that's, this is the global number. So for evolved geographies like US, the number is much higher. Unfortunately, in India, there is still a lot to be accomplished in this. I think there are very few institutions who are actively seeking investments into AIFs. Not anything against them. They've had their own set of experience, because as any industry evolves, as was being pointed out by Manish as well, the industry struggled initially for exits. There were also pools of capital which could not sustain and create a franchise. Now that this industry has reached some sort of stability, we will see some established franchises who will keep coming to the markets on a regular basis. And that is where certain institutions who are currently not active, we would expect them to become more active. And any encouragement from the government towards that can go a long way in terms of solving for that pool of capital that, as I said, is the most important thing before anything we can go ahead. Nothing to complain in terms of deal flow mechanics, in terms of we have access to almost every industry. In fact, as private equity, we have access to some of the most emerging sectors that we can hope for through the VC ecosystem. There are, through AIF mechanisms, we are treated as domestic pool of capital. So again, there are no restrictions when it comes to FPI. So deal making is something that is anyways happening. I think it's rather, the fundraising aspect, which I would encourage the government to look into and create a more proper framework around it.
Manish, I'll ask you about the sectors which are doing very well vis-a-vis Ps, and are there any new sectors that you're seeing in this sphere, where Ps are getting attracted?
No, but I think if you look at all our portfolios, in India, typically there are 4 broad sectors. At least as Kedaara, we've historically focused a lot on financial services, initially in lending companies, now increasingly insurance, asset management, so many sub-verticals within the broader one. But financial services, I've always believed, whether it was at Kedaara, before that at Temasek, it's the best proxy for the growth of a certain industry. It's also a very well-regulated industry in India. So that's always been our largest area of focus. We've also done a lot in consumer, whether it's consumer or consumer tech, companies like Lenskart, which we're IPOing tomorrow, Vishal, Megamart, Manyavar, are all companies that we were invested in, added, I believe, grew them a lot. And then the 2 other sectors have been healthcare and healthcare services, and then technology and tech services. Very often, people in this group will have a 5th one called industrials. In us, industrials is either a proxy for consumer or healthcare or so. So we don't have a separate one, but those are the 5. I think the big wave affecting every sector is both digitization and AI. I mean, I cringe when I hear the word AI because, it seems like the whole world support. So I don't think India will ever be, at least we want to invest in what's going on in the valley with huge billions of dollars going into a single company with doing LLMs. What we have decided to do, because we fundamentally don't understand and we don't believe we're on top of the game on what's happening in AI, being so far away from the center, So we've always believed in investing in the shovels rather than in the gold mine. So we don't think we're smart enough to predict what's going to happen in the future in terms of a product. But very simplistically, we know in order for normal companies to adapt to AI, they need to get their data, for example, well structured. So we've taken, after paying almost $300 million, a controlling stake in a company called Impetus as an example, which basically does data structuring. Right? So it's a services business. It goes to companies in healthcare or financial services, so sector agnostic, but it's a horizontal to help in that. So I do think, and also the whole digitization space, moving from bricks and mortar onto online, how the revenue model of a Manyavar or a Lenskart has completely changed from what was online, from what was brick and mortar stores to online, and how do you do the interplay between each other to maximize revenue? So I think the historical verticals are quite similar. I think time will tell how the AI mania affects India. We're still sort of a wave behind. At least for us, we've said we're too far from the center of the action, so we'd rather be playing on the shovels. But I do think at the end of the day, as I was telling someone yesterday, the sectors, you have to be very thoughtful at a certain time, because it's just not what is a good sector. It's the right sector at the right valuation. So today, if you look at the consumer space, extremely high valuations. So, you know, you would rather, and if you do a company in a high valuation, your degrees of freedom are much more restricted, right? So how you play it is not exactly a science, it's an art. And then what you really need to succeed with is not, you can't be smart in everything. You've got to be able to build a team which is, I would say, empowered enough to make the decisions, because the historical perception of private equity were these great giant leaders in every firm. The reality today is the Blackstone may have a Schwartzman or a John Gray, but the real work is done by 40 other thought leaders. And for each of us, the challenge is to build our next generation of leaders who can take on what we started doing and be able to adapt to areas and new developments where we might be dinosaurs.
Manish, since you mentioned AI, I'll ask you the next question. You are saying we are not at the center of things. India is not at this point. But how long can you stay away from AI? Is that something that's bothering the PE players at this point when the world is going somewhere else?
No, not at all. In fact, I think when there are manias like this, the best thing to do is go to sleep and wake up after 2 years and you'll be fine. I'm joking, but I'm saying, how does AI, I'm not actually worried about missing the next wave of investments in AI. We'll never get that. I mean, there are leading firms in the valley who should be grabbing that. It's more VC-esque than private equity. We wouldn't take the sort of business risk that VC guys do. We can't afford to take losses. They can. They can also get companies to give you a 30 or a 40 or a 100x. That's not what we play. We don't understand that space. So we're not insecure about that at all. For us on AI, the more bigger worry is, how will our portfolio companies be affected? Are we sure that the cost structure that we have in a, let's say, tech services company remains relevant when AI can wipe off half your cost and half your revenues? So our immediate focus is to protect the portfolio rather than worry about what new investments you might be missing or not missing. So, and actually in that case, we've been learning more. One of our companies, Purple, has done a great job in adopting AI. And we've taken their learnings to other portfolio companies. The answers won't always come for us. Then the second degree question is, as a private equity firm, what are you doing to adopt AI into your decision processes? And that we're doing a whole bunch of stuff also. But am I worried that we're missing the next phase? No, because, you know, frankly, 90% of those, you will not, it's like the dot-com boom, right? There will be a bust, and there will be some who will be great winners. But we aren't, what's the word? We're not taking risks here, or we'll continue doing what we know well. And we'd rather do the services around AI than the big bank's product itself.
Abhishek, do you agree with what Manish is saying, or do you have a different view on whether to use AI in your services and in your functions, and investing in AI differently, as in?
Look, I think we are all coming from the same breed, which is, private equity, which is looking for either buyouts or, larger deals which are profitable in nature. So the ecosystem of AI that is getting built around chip manufacturing, LLMs, which is loss-making, is not something that, we can support. In fact, even VCs in India will not be able to support, because we are talking billions of dollars of investments. So that's happening in the Silicon Valley and, in China. But the way we see it is, ultimately, this is an intelligence revolution that is taking shape. And there will be what we call as electrification sand and math would be at play. So, when I say electrification, people are talking about electricity generation, how to power this entire, computing ecosystem. So there's a lot of investments that is going there. Then there is, the sand, which is, the chip manufacturing that is happening. And then there is math, which is, the LLM where people are. I think these are all the basic foundation that one needs to get right over a period of time, which is, again, drawing a parallel with, the internet ecosystem. A lot of, cables that were laid out and, in order to make, broadband available, in order to make the infrastructure available. Our view is that ultimately this infrastructure is going to get commoditized, because the governments across economies would want everyone to have access to these AI applications, just like how internet and broadband is. I think what is important is to focus on the intelligence that is going to move on this particular scientific innovation and infrastructure creation that will happen. So again, taking from the internet boom, ultimately it is not Cisco's of the world or the IBMs who have made money. It is actually the likes of Google, Netflix, who used that innovation and applied that for their business model. So the way we are going to focus on is that how do we look at the second, third order derivatives of this entire AI ecosystem, where they are using this intelligence to power their business. There could be native companies that can come from the VC ecosystem, but there would also be established and emerging companies which are going to embrace this entire AI in a very material way, as well as to create moat. So let's call it EM square, which is embracing materially as well as to create a moat. And those are the companies that we believe are backable, and that is what we would be chasing, not just to make sure our portfolio companies are up and running on that, but wherever we believe we can power that.
Gopal, intelligence ecosystem and AI in Ps, what are your thoughts?
Until very recently, India was not even an entrepreneurial economy. We are now a highly entrepreneurial economy. We are on our way towards becoming an innovation economy, but we are not yet an innovation economy. AI is another example where we are behind the curve as a nation, as a society, as an economy. But historically, we have always done a good job of catching up, right? You have a telecom background, right? None of those telecom innovations came from India, but India is a great place for application of some of the best telecom technologies in the world. Again, when it comes to .com, very little of .com came from India, but we did a good job of leveraging those technologies. And when we're talking of .com, which second 2 or 3 generations later, we all refer to as digitization. Today I don't think we'll invest in a business which is not leveraging digital technologies, right? So I think we are 2 or 3 years away from saying that it'll be difficult for us to look at businesses that are not leveraging AI technologies. India will do a good job at the application, solutions, services layer. When it comes to models, etc., it's a highly capex intensive world, huge amounts of capex. And in the US also, this capex is not really coming from venture capital and private equity. 80% of this capex is coming from corporate America, the large technology companies. that have hundreds of billions of dollars on their balance sheet, maybe trillions. We don't have that tech sector here. In China, where model work is happening, this large amount of capital is coming from the government's balance sheet. We've made a start in India in models. I think Bharat Gen AI is a wonderful start. We've allocated $1 billion to it. We are closely following what's happening. Many people, I went to a college which had lots of smart people. So, if you're not, that's the next best thing you can do. Go to college with smart people. And so I have a sense of what's happening inside there. And I think we're going to achieve with $1 billion what many other countries maybe achieved with 4 or 5. But where you will see some immediate progress is the whole solutions application layer. I can't talk about what we've done because of the fact that we are in a silent period, but that's how we have invested in AI so far. Yeah.
Thanks, Hari. Your last words on AI. What are your thoughts?
I would just say that in our view, AI is an infinite game. It's going to be with us for the rest of our life. It's not going to be a 2 to 3 year trend. It's going to be with us for the rest of our lives. We are never going to have perfect AI. It's going to keep continuously improving. And so, how do we all adjust to this in our working as well as in our personal lives? I mean, it's going to be a constant game of adapting and innovating. So I would still say it's not too late to get onto that. And at EQT, we have this word called future-proofing. We're looking at all our businesses and saying, how do we position them better for the future? And AI is a part of that. We have a special team working at the investment stage, post-investment stage, positioning our companies, adapting best practices. And there's so much to do. It's really an exciting technology that can do a lot of interesting things. So we really think that that's the best way to adapt to it. Yeah.